Hey everybody, welcome in. It is a great day out there in the market and things are going good. So as usual, I'm going to try to pack a ton of information into 20 minutes or less, packed full of money-making guidance and advice. And the big theme today is, where are we going in Feb? Let's try to dig in and find out what's going on, as well as kind of who to listen to, who not to listen to, and some of the stuff that we see. Okay, so first of all, let's everything's working apparently. So let's first of all talk about this little tweet from early this morning. But this I thought it was just so funny. I looked at the chart of the tug of war, as I call it, between the bulls and the bears. This is the option price action that we need to look at very carefully all the time, and the green is the call option open interest, and the purple is the put open interest. You can see we still have that max pain level of 37k, but what's really interesting is we've gone bullish, and that kind of break-even line and price action line is kind of like a smiley face. So I threw some eyes on it. The eyes are not part of the chart. The rest of it is part of the chart. So again, we still have that heavy resistance at the 39k level, but we're also taking a third run at that 39k. So we'll see what happens. But there's a lot of other good stuff going on in the market. But before we jump in there now, I didn't talk about January returns at the end of December. This is a segment I do at the beginning of every month, right before the month begins. Tomorrow is Feb. Spring is almost in the air, which is great. But this, the reason I didn't do it back in the end of December for January is each time I did it in the last few months, I felt like I was jinxing the actual performance of Bitcoin. But January sucked, so I'm going to do it again. So here we are. This one, it is from CoinDesk, and it shows the average returns for Feb. But now the two things to notice here is, first of all, the average returns on the top green box for Feb is 12.6%. And that's good. That's a pretty good return. That's the third best month for the year over Bitcoin's history. Now, the other thing below is to show you the amount of times that Bitcoin is up during the month of Feb, and that's 86% of the time. Call it 9 times out of 10, which is great. So 9 times out of 10, we're up above 13%. So again, we had some sucky months, and in the past, historically, again, you can see very quickly from this, the 3 sucky months quiz. Anybody? Does anybody remember what they are? It's basically January, March, September. They are historically the weak months for Bitcoin. So let's jump in and see what else we got in our little treasure chest. So Nayib Bukele, he expects a gigantic Bitcoin price jump. Woohoo! And his thesis is one I've been talking about for years, and that is the fact that there are 56 million millionaires on Earth. And there's about 14 million Bitcoins. So he says his thesis is, if every millionaire on Earth suddenly decides to go buy a Bitcoin, the price will go crazy. So they can't. So that's one of the beauties why I've urged so many people for so long to become whole coiners, because it's so scarce. Millionaires won't be able to get a whole coin unless they spend a ton of money on it, and there isn't enough to go around. He gets it. Love it. So super excited to see that. But it's true. It's been my whole thesis since day one, and my fascination with Bitcoin as we're here. So boom, whole coiners out there, keep your security tight. Remember, it takes a lifetime to build a reputation and build wealth. It takes a second to lose it. So be careful there. Now, this is part of the segment today I'm going to talk about is who to listen to, who not to listen to, who's full of shit, who isn't, etc. I'm going to cover 3 today. First one, JP Morgan. Can you trust anything they say? I can already hear the boos and the groans from the audience out there. So this guy, Nikolaos Panigirtzoglou from JP Morgan, so he dramatically lowers his Bitcoin price target for Bitcoin, naming the biggest challenges for Bitcoin. So this is just comical. So in November 2021, so 6-8 weeks ago, when Bitcoin was trading around 69k, he said, I see Bitcoin hitting 150,000 as investors seek a hedge against inflation. Fast forward 6 weeks, he says, our previous projections, blah, 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 blah. Our fair market value for Bitcoin now is about 38,000. which coincidentally is exactly what it's at today right now. I mean, okay, I'm a JP Morgan analyst. 150,000 is my target. 6 weeks later, 38,000. Like, tomorrow, 1 million? I don't know. Who are these idiots? And why are they even published? It is just... This is worse than some of the shit that some YouTubers come out with. Anyway, enough of that. Always listen to the smart people. Follow the smart money. Ignore everybody else. This guy is one of the smart people. Sam Bankman-Fried was on a report with CNBC, and they asked him a whole bunch of very cool questions, but part of it was to celebrate his new valuation for FTX, valued at $32 billion, but he sees no crypto winter ahead. Again, this guy has his finger on the pulse of what's going on. He sees the money flow. He sees the trade flow. He sees the activity. He sees the money from venture capitalists, the money going into the whole industry. He knows what's up. And he'll be the first to say as well, because he has incredible scruples and is very honest. And he'd say if he saw one, but no crypto winter. Go Sam. Forget the JP Morgan guys. This is the new JP Morgan. Now, FTX also had their huge raise. And they raised $400 million in a Series C. And the FTX is growing from strength to strength all the time. I'm a big FTX platform user. I've loved it since day one. I've actually benchmarked it live against other exchanges, and it works, especially for high intensity, frequency, bottom nailing, limit orders, etc. It is the best, fairest out there. So I could talk about some of the VCs behind it, but I won't bore you with that detail. Anyway, they're all very good. Now, in this next chart here, I don't know why these things are getting cut off. This is the second time this happened in 2 weeks. But basically, this is from Will Clemente, and it shows you that whale balances have had those whales with balances of more than 1,000 Bitcoin. They have just started accumulating rapidly, per Will Clemente and Glassnode. And we saw this ourselves beginning to happen late last week, but this is really confirmed right now. This green spike is higher than we've seen, basically since going all the way back to Feb 2021. So extremely positive to see that action. They kind of been accumulating slowly, but for them to all of a sudden come in and just start grabbing, buying very hard. And we saw that happening. We saw that at 33K, 34K. Every time there was a dip down, Bitcoin's just been grabbed up. So that is very positive. Now, this was a cool thing that I thought we should share, which is very interesting. It's basically the Bitcoin ranges for 2022 per a guy called Przybysz. Przybysz. And he does foresee during this year. And what I like about this guy is he's very conservative with his estimates, and I love his simple charts. So you have your green, which is your accumulation. This is where we snipe. This is where we add to our bags. Very clearly there, the Bitcoin green line at the bottom of the chart, where to do that. Mean reversion. This is what I always talk about with equities. This is where we bounce back to kind of the average expectation of where the price action is supposed to be. And that is the yellow line in the middle. And then finally, the top is the overextension. He believes we could go to 102,000 in this bull market this year. The mean reversion line is about 51,000, and shopping layer is between 30 and 25,000, but obviously a little bit higher too. We're not going to see that 25,000. We didn't even get under 31,000. I've got some limit orders that are very lonely for Bitcoin sitting down there at the 31,000 level. They never even got a sniff. So I thought that was kind of cool to show what we can expect for some of this year. Now, follow the money. Again, in our weekly segment, we always look at this. This is the digital asset investment products inflows for the second week. They total about 19 million. Now, while it's small, it does continue to suggest a couple of things. One, investors are beginning to cautiously add to positions at these depressed price levels. That's good. Cautiously, probably because of the Fed and everything else. And Bitcoin saw inflows totaling 22 million. But Ethereum continues to suffer. from negative sentiment. They had outflows of 27 million. The outflows for Ethereum were greater than the inflows for Bitcoin. And the 8th consecutive week that this has happened for Ethereum. So the other weird news is Solana, Polkadot, and Cardano all saw little outflows. Solana normally sees inflows, but they did see a little bit of an outflow last week. And this is interesting because it doesn't mean they're shunning these coins, but what they have done, though, is they saw money going into the multi-asset holdings of about 32 million, as you can see there. So maybe what they're doing is not holding the assets directly, but buying kind of funds to help kind of more of a diversified investment approach to crypto. So we'll watch that carefully. And next week, I expect some more action because we saw some great action today, both in the stock market and in the crypto market. Now, Ethereum, similar type of range, again, from Przybysz. He is bullish on Ether, and he thinks the price of the crypto could eventually wind up anywhere between 6,000 and 8,000. So my target for the bull market was 8,900. So he's even under mine, which, again, I like the conservative approach. But that would be far above the current levels where we are right now. I think 2,700. And its all-time high, 48.91. So again, looking at this chart, you will see the accumulation zone, which we're way above right now. Mean reversion, about 37.60. And the overextension, about 7,500. So that's interesting to watch. And it's kind of so interesting, all the stuff that's happened with ETH. And, we spent all of 2021 talking about ETH 2.0. That's now a thing of the past. It doesn't exist. They're kind of rebranding what it's supposed to be. Maybe that'll help them buy more time. But we'll see if we're actually going to get there at all. Many people are saying ETH 2 or whatever they're calling it now. I can't remember. Consensus mechanism is not going to be ready until probably 2023. So watch that space carefully. And that's reflected by, as we saw, the money outflows, the lack of confidence, and money flowing into other assets as we go forward. So the question is crypto dead? Well, another metric here. This is from Visa. If you think it's a crypto winter, well, it's not. CNBC again cited Visa's most recent earnings call, where the credit giant said that customers are using crypto-loaded cards at a record pace, and the company has recorded $2.5 billion in payments from October to December. That's their Q1. And that was 70% of what they did in the whole of the previous year. So again, in 12 weeks, they did nearly a full year's action. That's skyrocketing. Hockey stick. So crypto is here to stay. Now, speaking of other bullish news for the whole crypto space, another phenomenal raise from Phantom Wallet. They raised $109 million, bringing the valuation to $1.2 billion. And that money will be used for hiring new employees, which are much more expensive now due to inflation, and talent is hard to find, and a whole bunch of other technology enhancements to the actual thing. Also, there's just so much good news going on right now. But the people behind Phantom Wallet are all the usual suspects. This round was led by Paradigm, but Andreessen Horowitz is in the background, Variant Fund, Jump Capital, Solana Ventures, and all the usual people. So, very good. But what do the VCs see in Phantom Wallet? So, before I jump in, if you've ever used MetaMask and then you take Phantom for a spin, you'll never go back to MetaMask. It's just, it's a very different experience. So what the VCs see, we now have over 2 million monthly active users. And you can see it's growing vertical. And also about 16 billion of Solana staked on this wallet. Swap volume is about 1.4 billion. They've done about 55 million dApp transactions and over 9 million token transfers. So this thing is being widely adopted in its early days yet. By the end of 2022, I expect these numbers to be way north of 10 million plus, and huge amounts of transaction volume. So that's what the VCC. Also, they launched the mobile version today, coincidentally, so you can have the same browser-based experience on your phone. So iOS, Apple system first. So that's that news. Now, the second installment of who to watch and who to listen to and who not to listen to. Again, Motley Fool, they came out with an article. This crypto will be the Solana of 2022. And that is Algorand. Spoiler alert, they believe Algorand will be Solana of 2022. I don't think so. Again, we analyze all the top 20 smart contract platforms. Not by a long shot will Algorand exceed Solana. So currently they handle about 1200 TPS versus 60,000 with Solana. They have high inflation and a whole bunch more issues. So it's not even in the same league right now. But we'll see. Maybe they can rebuild everything and transform themselves. There's always a chance. But I don't see it happening. So again, watch what these guys are saying. Now, looking at the chart of Algorand for the last 12 months, it's flat. It's basically where it was a year ago. So that's never a good sign for kind of a whole year to be lost. And it'll be interesting, actually. I've done a crude short analysis of all the cryptos today that were exactly the same as they were a year ago. And my money tells me, yeah, some of them may double, but we want more than a double this year. That's what we're looking for. We start at triples. Doubles aren't that interesting, despite the market situation we have. But considering the retracement we've had as well, it should be very easy to find a whole bunch of triples. So that's what we're looking for. Now, speaking of more people, be careful of who to follow. Unfortunately, I was going to do a piece on this and I decided not to, but the .com billionaire to Shitcoin Aficionado, Mark Cuban, has had terrible luck in crypto. Like the things that he's chosen, it's been very, very unfortunate. Talk about getting in at the deep end. And, you know, the cryptoverse is the Wild West, very dangerous if you don't know what you're doing. And it's not like traditional investments. You see a lot of people coming in, a lot of tourists think they know what they're doing. And they just say, oh, I heard in a bar that this is a good crypto. Buy some. This is good. Buy some. No, it takes a lot of work. So I was going to do a review of his choices, but I decided not to. Now, some of the names. Sorry about this. Got a little frog in my throat. He was in things like the rug pull with Titan, the Olympus DAO token, etc. Just train wreck after train wreck. So be careful who you follow. Do your own research and follow the smart money. Even follow the money flows. Follow the best technology. So speaking of stock market stuff, this is Steve Matthews, and a big thank you to Sanjay for sending this to me. But the market has fully priced in 2 hikes by May 2022, which many believe will come in the form of blunderbuss 50 basis point hike in the next FOMC meeting in March. So we'll see. Now, we saw that very clearly today in the stock market. It was insane. Huge moves in Amazon, Tesla, other big names just going straight up. So it looks like this is the sign that things are factored in. And remember, there's so much money on the sideline, and that's just going to bring everything up as we go forward. So it was a good opportunity to do some dip buying. And here is an interesting little article, again, to identify, does it make sense to buy dips? So I thought, for those of you who are buying dips on equities, this is an analysis of the 33 corrections since 1950. And the result is after the fact. So there have been 33 corrections. If you went in and bought them, these are the respective results after the fact. So your results, your gains on average are up 15% over a 12-month period versus an average of 10% return. Over 6 months, 6% versus 5, 3 months, a little higher than 3, etc., etc. So buying the dip does work. Always. So, and remember, the overall trajectory of the stock market is up, like real estate is up, because the denominator is debasing. Okay? So if anybody's in any doubt about where we're going, despite all the concerns about geopolitical situations and inflation and everything else, it's up with some undulations along the way. So finally, we've been talking about this a lot last year as well, but this is a bit of confirmation that the 60-40 portfolio is dead. And a quick reminder to everybody out there, the 60-40 portfolio is what a lot of people are forced to own by their financial advisors out there. That means 60% equities, 40% bonds. So in this here, from this chart from Bloomberg, you can see how between 2008 and today, only 3 times have we fallen this low from this portfolio of losses. January was rough, yes, granted, but we are down at levels we have not seen since C19. Obviously, the C19 March 2020 was an unusual crash, and 2008. There's a whole bunch of bad things happening. So now you have all these investment funds that are beginning to say, okay, maybe they should have done this years ago, but they're doing it now. It's like, maybe the 60-40 is dead. So we'll try substituting some alternatives away for that 40% into things like maybe some REITs, maybe some dividend paying stocks, etc. Ameriprise came out and said that. And then Citigroup are also trying to find ways to dance around it and say, maybe some quality equity names instead of bonds. I don't know, we'll see. But it's kind of scary. I still come across people that have huge allocations to things like annuities and bonds, and they're just getting fleeced because of inflation. It's eating away at their entire stack. So just be careful out there. It's only a matter of time, though, before these so-called genius financial advisors at Citibank and JP Morgan and what's the other name, Ameriprise, etc., they start thinking about layering in a little bit of Bitcoin. Remember, I did a video, November, I think, about the impact of just having a little bit of Bitcoin in your portfolio. It will deplete the weakness caused by your bond holdings. So with that, everybody, one final piece of news, a final piece in the FUD eradication section. This came in from the Daily Hodl staff, and they published a report on money laundering accounts for less than 1% of all crypto transactions. In fact, the title is extremely misleading, so I didn't like that title. It's actually more like 0.05% of all crypto transactions is made up of money laundering. But fiat money laundering makes up 5% of GDP. Think about that, everybody. I know you have your head of ECBs and IMFs and senators in the US believe crypto is all about money laundering, but it's not. Look at the data. It's like the ESG FUD. Look at the data. So one day, I hope people start reading more and listening to people who know. Anyway, hope you like the content. Thanks all. Sorry about that little tickle in my throat, and I'll see you all tomorrow. It's Octa Tuesday. Bye.